Well, good morning and welcome to Business Morning, your first stop for business insights to start the day. On today's agenda, we're zooming in on Nigeria's earnings season, what to expect from corporates, reporting their numbers. We'll also break down the framework for restructuring, distressed companies in Nigeria, a topic that could, reshape the way businesses, navigate challenges. And beyond our borders, we'll track the latest global economic news and how that could impact markets here at home. First off, let's get a check on what's playing out with the markets that we track, starting with oil. Now, we're seeing oil prices down as investors, they're keeping an eye on resumption in supply from Kazakhstan, but price declines were limited. As a massive winter storm that hit crude production and affected refineries on the U.S. Gulf Coast. So after starting the week strong, that's for the oil market. Now we're seeing a pullback today, $65.28 a barrel. That's for Brent crude, dropping from that $66 level. WTI now smack on at $60.41 a barrel, 0.36% down. We'll see if that holds again this week. We know it's a range trade so far. Let's get a check on the local bourse now, how it performed yesterday. We kicked off the week with a slight lift yesterday as selective buying in a few stocks that nudged the all share index. Would I call it up? Yeah, but it's to the green side though, just about 7 points higher than the previous trade. And then we see equity cap that's still sitting at over 100 trillion there. And now let's get a check on other parts there. We see for activity, volume, value deals, all in the green compared to the previous trading session. 601 million, that was what was traded, valued at 17.3 billion. Deals, 58,424. Let's get a check now on the top gainers. MPF Microfinance Bank topped the list, a big 10%, 5.61 naira. Morrison, 9.97%. And Home REITs, they're one of the REITs, 9.95%. Let's look at the top losers for yesterday. Mayor Baker, Nimeth, yeah. The pharmaceuticals pulling back at this one. This has done really well from last year into 2026. But yesterday we saw a pullback. All of them were moving up at the same time. Then ABC Trans, that's 9.33% down, 5.15 naira. So, definitely we'll unpack, what's played out so far. Chams, the top trades. Chams are topping there with 41.57 million traded yesterday. Definitely we'll give you an update. Markets are going to resume trading very soon. But let's unpack, what to expect. It's earnings season, and definitely investors like to, watch out for, financials for most of these companies. We're expecting for Q4 and full year earnings. That's for 2025. Let's also find out trading strategy for 2026. Joining me now to unpack this, we have Mr. Mukhtar Mohammed. He's the CEO, Finance with Mukhtar. Great to have you on the show, sir. Good morning.
Good morning, Ladi. My pleasure. And this is the first time I'm being on your show this year. Happy New Year.
Yeah, Happy New Year. Quite an incredible 2025. Definitely one of the best performing trading years so far. But now, we're in 2026. Some companies are already releasing results for 2025. What are you expecting?
Ladi, 2025 is going to be a very positive year for the market. I'm very optimistic. Microeconomic stability, FX stability, and then reforms begin to have human face. So definitely I'm very positive about the market in 2026. Like you said, the results have started coming in. If you look at Unilever, it has surprised investors with that wonderful result. Fantastic result, especially in the area of the liquidity. It's been a long time you see a manufacturing company, a consumer good company having that kind of liquidity or up to about 110 billion, even earnings in their liquidity. That means having income from their savings in the bank. That is to tell you how much these companies have been able to come back to the green line, especially the conglomerate, those that are involved in consumer manufacturing and others. So that tells you, and that points you to what we are expecting in this year 2026.
And definitely before 2025, when we check the results, for maybe 2022 and the likes. It was always about FX losses, back then. But we see the Naira was stable most of 2025. So I guess the signal for Nigeria's economy in 2025, is it really clear, when we start seeing, all these earnings, coming out, what it tells us, was it all positive for Nigeria's economy in 2025?
Larry, when it comes to the Nigerian economy, positivity, like I always say, positivity is relative to who it's really impacting. If you look at the companies, yes, positivity because FX has stabilized. If you look at the banking sector, positivity because recapitalization is in its final stage. We are seeing good news from this area, knowing fully well that almost all the banks are going to survive it, depending on which license they want. As they stand now, virtually all of them have survived, depending on what license they want. And again, but if you come to the ordinary Nigerian on the street, he's telling you that I'm not feeling anything yet. So that is where we need to really look at how they can feel something this year. But if you look at the market, this year, definitely, market sentiments are very, very positive because, again, you've talked about those FX losses, you've talked about those stability, then you talk about those third quarter results and those bad results that we got last year. But we have seen a shift, we have seen a change. So definitely, I for one, am very optimistic about the companies. But for individuals, yes, we'll still be going through the roller coaster. But one thing we know is not as volatile like it used to be, whereby price volatility was high. You buy something today, the next 24 hours, maybe 10%, 15%. But now we have still stability in consumer goods. So definitely, we'll see that have impact on consumption. Most of these companies that are consumption driven will begin to see those impact on their bottom line. And also, yes, those are the positivity. Remember, again, as an investor also, the year looks very positive, starting in a bright note, like you have pointed out. But again, we still have those challenges of those tax law, the tax law. Where are we? What are we going to do? Is it 30%? Is it 25%? Does it take effect? All those are things that will definitely drive the market this year.
Right, so much to unpack there when it comes to the tax laws. But, still looking at 2025, definitely we did talk about the Naira being stable, most of the year. Then we did see inflation that tended downward, according to the MBS, in most of 2025. But when we look at the MPR, that stayed quite stable. Then we had that one cut, in 2025. So looking at 2026, do you think some of these companies have a reason to either increase prices of products and services in 2026, or they don't have to do that?
Larry, the worst is over. I don't think the company will have to do that. Most of those companies were suffering from FX losses. So I think the worst is over. We have price stability now. What you definitely see in the company will be the output will improve. The sales, I think sales will definitely improve now, because people will be able to consume most of those goods now compared to what it was before. Price will remain like it was, as it is now. Coming down of price, I don't think so yet. But I think what we will see is that we'll get a lot of sales from this company. A lot of people will be able to afford those products going forward this year.
Yeah, affordability, that's one other major issue at this point. But how should investors position, for this earnings season and, dividends announcements? We're expecting a lot of them, to roll out this season.
Larry, the problem is always that investors should position ahead of the results. And so normally I tell, if you're a dividend-paying investor, from the half year, you begin to know the trend. So if you look at those trends, you are very sure that this year was going to be very positive in terms of dividend payout. Even whatever sector you have, we saw that surprise dividend payout from MTN, which we're not expecting it. So expect MTN to pay dividends at the end of the year. It might even be better than what they gave us. You expect the banking sectors. Don't get your eyes off them. They will still pay dividend. Despite forbearance and order, we saw Zenith Bank increase its dividend payout by 25%. We saw Zenith Bank increase its dividend payout by 25%. We saw GTCO maintain that dividend payout. We saw UBA paying dividend, even if it was not what investors expect. We saw Access Bank not paying dividend. We saw Fidelity Bank not paying dividend like we always expect them. But we have seen that third quarter result, and we have seen them going forward. We expect them to pay dividends. So for the banking sector, the tier 2 banks also, we saw dividend payment from Wema Bank. So we definitely will see that again. And so I think I'm very confident about the financial sector in terms of dividend payout. So any investors that have key in there just need to remain there. But if you are a designing investor, you are thinking of keying in now, I think there are better opportunities, especially for dividend paying investors in Zenith Bank, in GTCO, in Access Bank, in UBA even, and even in the Fidelity Bank that were not able to pay dividends towards the half year. And then if you look at the conglomerate sector, Unilever would definitely pay dividend with that huge cash reserve that they have. So definitely don't take your eyes off it. We expect Nigerian Brewery to pay dividend this year. We expect Guinness Nigerian to pay dividend this year. So it's going to be a very bumper year for investors, especially if you're an investor in the brewery sector, you're an investor in the telecom sector, and you're an investor in the banking sector. Insurance sector, I think we might get dividend from stocks like NEM Insurance, Amsa Mansa, and Crusader, which for me, they're beginning to go beyond that insurance, normal insurance stocks. Now, remember, some of them also have holding structure, especially Crusader that's involved in the pension, they own a pension fund. So definitely, I think we shouldn't take our eyes off those companies I just listed. Oil and gas also, expect dividend payout from Seplat as usual, then expect that dividend payout that could be a game changer in that company called Arade.
Right, and I remember the interesting conversation you had recently about, Seplat. If you're able to afford that stock, it's really expensive at this point. But we did get some news yesterday for one of the big telcos. That's Airtel Africa. A court fined them 210 million naira for unauthorized use of Nigeria Go Survive song. And I'm wondering how bearish is this? Is it bearish, for this stock?
Ladi, what is that? How much did you say they were fined?
210 million speeding fine, I guess.
10 million.
210 million.
110 million.
210.
210 million.
Yeah.
Well, ordinarily, you should see that reflect in the market because 210 million out of a company bottom line is not a child play, but there will definitely be a recovery because again, like I said, Airtel is not Airtel Nigeria, it's Airtel Africa. So most of their own their subsidiary in other parts of Africa are not affected by this. So what you might see will be a slowdown in terms of the earning from the Nigerian side, which is actually giving them, they are the one that give about 70 to 50 to 60% of the, improve the 60 to 60% of the bottom line of Airtel Africa. So that could happen. But again, because of their diversity, definitely it will not be that huge in the bottom line. I think, yes, it will affect, especially the subsidiary in Nigeria, or like I say, it is Airtel Africa, not just Airtel Nigeria.
Right. All right, let's look at the gold story at this point. Fantastic year for in 2025 for gold, silver, and 2026 seems to be continuing, in that line. I'm sure most investors now, looking at their portfolio, they might be saying, silver and gold, I have not in my portfolio right now. And I'm wondering, is it still a good time, looking at these prices, to get into gold? Or you just stay out, even though you have mostly risk assets in your portfolio?
Yeah, Ladi, like you said, I said about Seplat. Gold is for the deep pocket. So if you have that deep pocket, you are looking for safe havens, you have been able to develop that, you have been able to have that deep pocket in terms of cash reserve, heavy pocket, then you could be preserving your wealth through gold.
All right, definitely a lot to unpack there. But I feel like nothing goes up forever. I keep tracking that gold price and silver. Let's see if maybe we'll get another big 100%.
Ladi, when it comes to the market, nothing goes up forever. But it goes to where we call it price equilibrium. It doesn't go below that price.
All right, we'll keep tracking that. Thank you so much, Mr. Mukhtar Mohammed, CEO, Finance of Mukhtar. Thank you for helping us unpack what to expect in the markets.
Thank you for having me, Ladi.
All right, to other stories now. Nigeria's rice import windows, that may close soon as the federal government-backed agribusiness committee. They say falling food inflation and a domestic surplus, largely fueled by imports and not local production, may make continued rice imports unsustainable. Last year alone, Nigerians spent over 1 trillion naira, bringing in 2.4 million tons of rice, raising concerns over foreign exchange outflows and the country, as the country seeks to boost homegrown production. So that's one to look out for. Then results in Nigeria's debt market defies expectations as government bonds attract a massive investor appetite. At its January 2026 auction, the federal government offered 900 billion naira in bonds, but ended up allotting a whopping 1.54 trillion naira, signaling robust confidence in government securities, even amid high interest rates. The results highlight strong demand across short and long-term papers, with bids far exceeding initial offers and investors locking in yields across the curve. And to the borders now, Nigeria Customs Service launched the time release study, a comprehensive assessment which aims at enhancing trade facilitation and competitiveness at Nigerian ports. The report, which was conducted at the Tinkan Island port, reveals that Nigeria has the capacity to clear goods within short intervals, but faces concerns of manual documentation, fragmented scheduling, and an area which the Comptroller General of the Nigeria Customs Service says is receiving attention. The Comptroller General of the service was speaking at an event to mark the 2026 World Customs Days. Said its revenue collection came to 7.28 trillion naira as of December 2025. Take a listen.
Government officials, men and officers of the Nigeria Customs Service at an event to mark the 2026 World Customs Day with the theme, Customs Protecting Society Through Vigilance and Commitment. The day is set aside to appreciate the role of customs officials in facilitating global trade and protecting borders. It also highlights the importance of customs in revenue collection and border protection. The Minister of Trade and the Minister of State for Finance reaffirmed government's role in supporting the service to achieve their mandate.
Just to commend the work that you do. It is an important mandate, not just trade facilitation, which is particularly dear to my heart, but the vigilance and keeping our borders closed. I align with the comments of the chair of the Customs Committee and your role in national security.
The service has demonstrated that revenue growth and trade facilitation are not mutually exclusive, but mutually reinforcing. And for this, I commend all of you.
The Comptroller General then shares the scorecard of the service for the year 2025, marking a significant improvement.
In 2025, the Nigerian Customs Service collected a total of 7,281 billion naira, exceeding the target of 6.5 trillion, with a positive variance of 697 billion naira, representing a growth of over 10% against our target.
He also reveals the findings of the time release study, an assessment which aims at enhancing trade facilitation and competitiveness at Nigerian ports.
If we put these reforms together within the next 1 to 3 months, we can begin to see reduction in clearance time by as much as 40%. And if we put it in the perspective of what you saw today, something from 4 days, 21 hours, approximately 5 days, to 2 days, 22 hours.
After the speeches, some officers of the service and its partners who distinguished themselves in exemplary service received awards. The Customs Service is pledging to invest in technology, institutionalize procedural reforms, and strengthen partnership to sustain its dual mission of protecting society and enabling prosperity. Sarah Chimugu, Channels Television News.
And now to our next conversation. In today's tough economic climate, more Nigerian businesses are feeling the strain, rising costs, weak consumer demand, tight credit, and volatile markets. For many companies, the big question is no longer just how to grow, but how to survive. When a business gets into trouble, should it be shut down and sold off, or can it be fixed, restructured and put back on its feet? In Nigeria, we still tend to default to liquidation and receivership options that often mean job losses, wasted assets, and long-term damage to the economy. But in many other countries, restructuring and business rescue are used to save viable companies before it's too late. Today on the program now, we're asking a critical question. Is Nigeria using the right tools to rescue distressed businesses? Joining me for this conversation, we have Amala Umeke, is a partner, Stren & Bland Partners. Join me right here in the studio. It's great to have you. Happy New Year.
Same to you, Ladi. Thank you very much for having me.
Fantastic. So, definitely as a business, we know there's cycles. Sometimes you're up, and sometimes you have to deal with, being under. 2025, we had interest rates at, 27%. We had just one cut that took it to 27%. And obviously, when you go to the banks, it's higher than that, trying to get a loan. So sometimes as a business, you get into a tight corner. There's no money. Demand is low. What do you do, at this stage? Some say, you know what, I think it's time to jump ship. Let's go and start on maybe another business and leave this one alone. But you are advocating for a different way, around that. You don't have to just let the business die. So talk to me about the restructuring process, in Nigeria, and why Nigerians should really care about restructuring.
Yeah, thanks, Ladi. And I like how you put it, right? If you look at a company, it would typically go through cycles. And the way I like to look at companies would be as a human being. Because essentially, a company is incorporated. That means a baby is born, right? A company goes through a process. It grows. And it goes through good times, bad times. It gets sick at some point, just like human beings who get sick. So the question I keep asking people is, do you then, once somebody gets sick, do you then take your gun and shoot the person, or do you euthanize the person, right? So that's just it with companies, right? Now, in Nigeria, we have a very pro-liquidation mindset. Once a company is going through a situation of distress, you want to just shut it down. You want to go in and sell the assets and collect the assets. That's not it, right? And the reason for that is that a restructuring process is just about giving a company that second chance. A company is sick. You want to stabilize it. You want to find out what the problem is, and you want to get it to continue going on as a going concern. And importantly, for instance, if the company can't continue going on, let's say it's terminally sick, then you want to sell it through an M&A process. You want to have an orderly exit process that will maximize value for everybody. Now, why should Nigerians care? Why do we have to ensure that we have a workable restructuring process? It's because once you liquidate a company, once you enforce, once you go into receivership and everybody is fighting, the value of that company goes down. The company itself is shut down, job losses, right? The trade partners, everybody's out of business. But very importantly, the creditors, for instance, you get 30 cents on a dollar. The research is there, the statistics is there. Not just in Nigeria, there was a Cox report that was done in the 80s in England that actually bettered this process that we have now. So the point is everybody's at loss. But when you have a restructuring process, and the mistake people make is to think that perhaps it's waste of time or that it takes time, right? Once you know, as a turnaround and restructuring expert, once you know what you're doing, once you're able to stabilize the company, once you do your IBR, you're able to determine, can this company continue going as a going concern, or do we just sell this business? But whichever way it goes, whether you are going to continue rehabilitating the company and then it's able to pay off its debts, or you want to then package the company and then sell it through an M&A process, it's orderly. And it maximizes value. You're not doing a fire sale. People are not getting 30 cents on a dollar. And so everybody is well off for it. There's no job loss, or even if there's job losses, there is that ability to cater for things. So that's the point.
Right. All right. So, some of the problems most of the time when it comes to loans, you borrow so much money, and you're not able to pay back because you've not made money on the money that you've borrowed. So we look at some of the data there, non-performing loans, recent data, signaling, how the banks feel there. NPLs rising towards 1.6 trillion and above. So that's, reflecting corporate stress when it comes to corporate repayment capacity. Loan losses between 2023 and 2025. Nigerian listed banks have recorded about 3.77 trillion in loan losses, at this time. And so, looking at it from the bank side of things, they're there for business, too, and they might not have the patience for restructuring.
And that's the point, and that's the mistake which some creditors make, right? So let's go through the process, right? What do typical banks, especially in Nigeria, do when you have a distress situation? You go in, you enforce. So you either do a liquidation or you do a receivership, or God forbid you end up years in court, going from High Court to Court of Appeal and Supreme Court, trying to get your money back, right? When you talk about restructuring, people, the lenders, the creditors will think, oh, I need my money back. I have to report to CBN, and so I don't have the patience. I want to go in. Now, the statistics are there that when you go through the process of liquidation, receivership, because what receivership actually means is that one creditor just appoints somebody who just goes in, and the duty of that person is actually to just realize assets and pay off the person. Because it's typically through a fire sale process. So let's say you are owed 1 billion. The statistics will tell you that more often than not, you get 300-400 million, typically because it's a fire sale. But what we are saying is that with some of the new tools that we now have under the Nigerian legal framework, you have a process where you don't necessarily need to have to wait for years for the company to turn back to become a going concern. Like I said, once you actually know what, and I'm hopefully going to talk about that in terms of the depth of expertise that we have currently in the market. But once you know what you're doing, through an IBR process, you actually be able to determine, right, what's the best outcome for the creditors, whether secured or unsecured in this process, right? Is an M&A the way to do it? And the beauty of restructuring and the process that we have is that when you package this company, unlike when you do a fire sale, when you package it through an M&A process, you sweeten it. You are able to do some quick fix that will get a potential investor to then look at the situation and say, okay, I'm going to buy this company at a price that brings value to the table for the creditors. So for us, when you look at it, the argument is that actually a restructuring process gets better outcomes for creditors, and it might even be quicker than when you are going through a process of liquidation or winding up, right? Because again,
but what if the acquiring company is not giving you a sweet deal, and they feel like, maybe they'll just take advantage of the situation and give you under market value?
So that's the point. You typically have that situation when you do some of the more, I would say, antiquated processes, right? Because for them, they are coming in, it's through a fire sale process. But when you are going through a restructuring, the pressure isn't there as such. So you're able to create a market tension, for instance, that will be able to do a competitive bid, right? You're able to get more people on board. You're not desperate to sell, and you're able to get more value for creditors.
All right. So looking at the legal tools, so far, what are the ones available, presently in Nigeria, when you're trying to restructure a company?
Okay, so in 2020, we had a radical change in the corporate landscape when it had to do with the legal system. We had the new Companies and Allied Matters Act. It's no longer new, it's now 6 years, right? I still like to call it new. We had the old CAMA, right, as we call it, in 1990, which was a pro-liquidation, pro-killing, pro-receivership system. That has now changed under the 2020 CAMA. Luckily, I was in a committee that worked on the insolvency aspect of it. And what we did was to look at the various jurisdictions, worked with World Bank, looked at various jurisdictions, especially the UK, where typically we have some form of affinity in terms of the law. Now, what that did was, for the first time, it brought in some level of legal framework for bringing in corporate restructuring in Nigeria. So we have what we call the company voluntary arrangement, which is CVAs. And then my favorite, because that's essentially what I do nowadays for a living, which is administration. It's such a powerful tool. It's a tool that there's a powerful instrument that was built into the administration process, which is what we call a moratorium. Right. So when a company goes into administration, administration is just a fancy word for turnaround and restructuring. So the company says, I'm unable to pay its debt. And it's not just the company, right? A creditor says, this particular company is unable to pay its debt. Right. The company goes into a process where an expert, a turnaround and restructuring expert who is called an administrator, then moves in independently and takes control of the company, takes control of the management of the company. It's the moratorium then says you can't sue the company, you can't take any action, you can't enforce against the company. So to speak, gives it a breathing space for it to then be able to reorganize it as first, look at its operation, look at its strategy, look at its debt portfolio. The turnaround and restructuring expert goes in, is able to now do an independent business review. Of course, there are a lot of advisors that will come into play, and then find out what is the issue with this particular company, and then is able to come up with a restructuring proposal that to the creditors to say, this is the way forward. Are we going to, is this company still viable, right? Are we going to continue running this company as a going concern, and then we will be able to pay the debt, or, you know what, the best...
Or do we just let it die?
I mean, worst case scenario, right? Do we let it die? Or do we package the company and, and sell it, right? And we'll be able to get monies for the creditors. So right now, what we have is a system that has improved. We have the insolvency regulation 2022. We are currently reviewing that because we are very keen to ensure that we are matching what the global realities is about. Luckily, I chair the committee set up by the Corporate Affairs Commission, trying to look at the regulation at the moment and then what we can do in building it in order to be able to get a more robust.
Because I hear about administration a lot. When you're covering stories in the UK and other developed countries. But why isn't that used here?
Essentially, I would say first, there isn't much knowledge. People don't know it, which is probably why for the first time I decided to come and speak on these subjects. People don't really know about it. So when you talk about it, it sounds Greek to people, right? Like I said, we had a system from 1990 to 2020, right? And we never had that. So most of the practitioners, all they know is receivership and liquidation. So most people do not know that there is this process, whether it's the lawyers or the financial market, the creditors, even the companies themselves. So there is lack of knowledge. Like I said, again, the system hasn't really developed. We're hoping it will develop. In fact, my prediction is by the next 5-10 years, if we have the sort of trajectory that we have now, maybe we won't be talking about receivership.
So can a company independently say, you know what, we would like to go through this administration process?
Exactly.
You don't need some kind of regulatory approval or anything to do that?
So you can, actually. In England, where we borrowed, it's actually the companies themselves that request for that. In the US, where you have the Chapter 11 bankruptcies, it's the companies that would request for it. But in Nigeria, my experience is that companies are, first of all, we have this culture of you are distressed. Genuinely you are distressed, but you don't want to admit that you are distressed. You don't want to say it. You go into situations where the company, oh, you know what, I'm like, what we just need is the next line of credit. Once we have the next line of credit, we'll turn around. We don't, So you have people living in denial, and they might have their reasons. If they admit that they're in distress, their trade partners will run away. People will have a run on their assets. But that culture needs to change, right? It's like when you are sick. You need to admit that you are sick so that you will get help, right? But what we're seeing currently in the market is more and more, especially with the very sophisticated DFIs, right, who would typically not want to go through the process of, doing very crude enforcement. You're looking at some of these sophisticated, more savvy restructuring process. And we're hoping that now that the creditors are beginning to pick it up, hopefully even Nigerian creditors will begin to pick it up, not just the secured one, but even trade partners. then the companies themselves.
Do we need reforms to, create more adoption of these other processes?
I wouldn't say so much of reforms, right? I would say that what we need is advocacy, right? Our judicial system, I wouldn't say we have very fantastic judges, right? And we have judges who are also now becoming aware of this process, and they are also encouraging it, right? So I would say what we need is widespread acceptability. Getting people to adopt the process, right? We need the judiciary to encourage the process, support the process, give decisions. I would say the ones that we've been doing, the ones that we've been acting on, we've been seeing active support on the judiciary, from the judiciary. Obviously, some of the reforms that we need, very importantly, is from a cross-border perspective, right? Nigerian companies are going cross-border. We need the ancestral model law on cross-border insolvency, right? So that you'll be able to support Nigerian businesses who are going cross-border when they go into distress, and even companies coming in. Obviously, like I said, one of the things that we would also need is expertise in the market, right? I know when
how many people are out there that can actually help
I know
you?
when I say that, it's like saying I need more competition, right? But the truth of the matter is the more the merrier. And it's not just on the legal side. Very important, because the legal side is just a small part of it. We would need a deep financial market in order to be able to support some of this. We virtually have with due respect to our capital markets and financial advisory guys, we're virtually, from my experience, we're acting on one very large real estate restructuring, and we're finding it very difficult in order to be able to get new money coming in. So we need a market for distress trading. We need a market for funding new money in distress situations. Obviously, that would come with some level of improvement in some of our laws by allowing what we call super senior credit for people who are bringing in new money, to give them incentives to bring in some of these things. So I wouldn't say so much of reforms, because we've got the foundation there. What we would need is adaptability, acceptability by the market. Companies should not resist it. Creditors should also adopt the tool, because what we're seeing is companies resisting.
And we have a lot of recapitalization happening right now with financial services and also for capital market operators. Does it increase the risk for distress, putting some of these companies, into stress mode?
No.
Not really?
No, I don't think so. I think what it would do is that it would create a more robust market, right, for people to play in, right, a more resilient market. That's my thought.
All right. Well, so much to unpack there, and I guess the message is, if it's failing, if it's stress, that's your business. You don't have to let it die. There are other ways.
Exactly.
To bring it back to life.
And the point is, look at other jurisdictions. Look at the US, for instance. If you travel a lot, if you go to US, you would have flown American Airlines, for instance, General Motors. These are companies that have gone into Chapter 11 bankruptcy. And they've been out there. Look at the UK, for instance. Companies are thriving. They have adopted administration. They have adopted, even now they have what they call the restructuring plan process, right? So if you look at South Africa, since 2011, they have a business rescue process. The point is, a good insolvency framework, a good corporate rescue framework actually creates a very robust economy.
Right.
Because you don't have job losses, you don't have a system where creditors would have to write down a lot of things because they're taking 30 cents on the dollar. You don't have a system where companies will just suddenly be killed. Like I said, if somebody is sick, do you just go and take a gun and
you don't let them die.
shoot the person, right?
All right, thank you so much. It was great having this conversation with you. Amala Umeke is a partner at Stren and Bland Partners. Thank you for coming on today.
Thank you very much, Ladi.
All right, we'll take a break now. When we come back, more conversations. Please stay with us. And some company news now. Into Switch, one of Africa's leading integrated payments and digital commerce companies, processing more than 90% of Nigeria's card and mobile money transactions, has concluded the 7th edition of its flagship corporate social responsibility initiative, the InterSwitch Spark National Science Competition, which took place in Lagos. The winner, that's a Saint Raman of Adedokun International School of State, emerged from a set of 9 finalists and garnered a score of 260 points. Take a listen.
The 7th edition of InterSwitch Spark National Science Competition, Nigeria's foremost science, technology, engineering and mathematics intellectual challenge, has been rounded off as 9 brilliant contestants slug it out at the grand finale.
Of InterSwitch Spark 7.0. Wow!
The journey of these ones began as they were part of 18,000 registered senior secondary school students nationwide. 27 semi-finalists emerged from the preliminary rounds, marking a major milestone in the journey towards the grand ending.
Which of the following is a male sex hormone? A. Estrogen. B. Insulin. C. Testosterone. D.
After a well-tested process with questions from science-related fields, it's time to announce the winner. The winner and his parents appreciate InterSwitch and says winning the contest is a dream come true.
In terms of my future ambitions, my drive to change my country, not just to be the richest man or whatsoever, but to impact others. That is the vision of InterSwitch that I'm carrying, impact.
I attribute his success to God because he is a gift. We make sacrifices like trying to deprive our children of certain leisures and pleasures that distract them from their studies.
Management of InterSwitch speaks on what the company represents in terms of nation building and youth development in Nigeria and takeaway for the young ones.
It is an instrument to nurture Nigerian human capital, an instrument that helps advance educational equity and drives a sustainable national development. And that's why at InterSwitch we are truly committed to ensuring that we drive STEM education at different levels.
Platforms like InterSwitch Spark over the last 8 years have come to prove that with the right support, belief and discipline, you can actually unlock tremendous potential regardless of your background.
The first runner-up went home with 10 million naira scholarship over 3 years and a laptop, while the second runner-up received a 5 million naira one-year scholarship and a laptop. Additional cash prizes were awarded to other finalists, while the ultimate prize of 15 million naira, which was won by Saint Riemann of Adedokun International Schools, Ogun State.
Well, let's head to the commodities market now. We have Halima Adediran, a senior analyst with FDC. Great to have you on the show, Halima. So first off, we have the first meeting. That's for the U.S. Federal Reserve. That kicks off today. We still have the issues there with, President Trump wanting a rate cut since 2025, and now we have the first meeting. Then we also had that defiant video from Fed Chair Jerome Powell. What are you expecting?
Okay, so the Fed meeting is starting today, and it will be concluded tomorrow. And I think the market is factoring in that the Fed will hold rate, meaning they will maintain it will maintain status quo. But before we go into that, if you look at the recent data that just was just published by the U.S., we'll see that there's still a strong labor market. Although the inflationary pressure is easing, but the price is still very elevated. So we are seeing like an equilibrium in the demand for supply and in the supply of labor markets and in the supply of labor, meaning we are seeing equilibrium in that regard. And so if we look into that, we'll see that the market is much more interested in forward guidance as regards what will be the trend of interest rate movement in 2026 rather than the immediate decision of the Fed. And why do I say that is because that will give a lot of decision and positioning for the global investor. For instance, if the Fed decides to be hawkish, that means that we'll see a shift in capital to dollar assets, which will mean a stronger US dollar and could be a pressure for emerging markets in terms of their interest payments on loans and all. And if the Fed decides to give a forward guidance that is dovish, we might see a depletion in the asset price of commodities that have grown as regards expecting a dovish hawkish stance from the Fed. So, and that will mean that the emerging market currency could fall. So ultimately, the Fed's decision is not really the major thing for now, but much more the guidance as regards what will be the future decision in 2026 in general, and that will go a long way to affect the growth, inflation, and even the financial stability in 2026. But in summary, the market is expecting that there will be a status quo.
All right, definitely a hold is expected. That's consensus at this point. But let's look at oil prices now. Despite a supply disruption in the U.S. Gulf Coast, now there's a supply, resumption, from Kazakhstan. So I guess it's, supply and supply disruption and supply resumption, in another part for the oil market. Explain how this is working out for the prices.
For the oil market is a kind of interesting market for now, and majorly the shift that will be seen will be more of a short-term information as regards price movement, demand, and supply. But for the current one, we are seeing that Kazakhstan is expected to resume exportation because the routine maintenance has been completed. And also, on the demand side, we are seeing that the U.S. winter storm could necessitate an increase in demand for energy. But while we are seeing a drop in the oil price, despite this, the need in the demand and the supply side is because the fundamental in the oil market is supporting ample supply, and that's why that is drifting to a downward or a shift in the oil price. So expectation as regards oil exports from Kazakhstan, because it's one of the largest oil producing nation. I think it's ranked the 12th when it comes to proven oil reserves too globally, and is one of the OPEC Plus member, which is producing about 1.7 million barrels per day of oil. And so that is signaling to the oil market that there could be a surplus in that regard, and that's why we are seeing that drop in the oil price. So going forward, we'll still see that oil price will be driven by OPEC limit production, ongoing geopolitical tension, and uncertainty in the global market. So that is the situation for now. But it's much more of a short-term oil price information rather than maybe a drop in demand or a collapse in demand.
All right, let's bring it down here now. Recent data from CBN shows that money supply growth that dropped. I guess good story for inflation. How are commodities starting off or looking in January?
Okay, so the money supply growth dropped to 9.75 is just signaling that the CBN is trying to tighten liquidity the more. In order to curb inflation and exchange rate stability. And even if we look at the fiscal policy too, it's kind of tweaking towards a contractionary policy as well. The Treasury bill auction that was done last week too is just a way of mopping up liquidity in the economy. But beyond that, we'll see that a country like Nigeria that is battling currency volatility, high inflation, and fiscal pressure, there will be a trade-off in that regard, because drop in monetary supply, money supply growth means less credit expansion for households, for businesses, and which could in turn affect production volume and employment opportunities. So that will mean a way or a downturn in the economic expansion or performances. And so I think for us, it's much more effective if we marry or combine complementary fiscal discipline with structural reforms to ensure that the lower liquidity does not translate to a sharper economic downturn, because we have a peculiar case when it comes to our economic dynamics in Nigeria. So I think it's just to mop up excess liquidity to control inflationary pressure, but we must look at the trade-off too and the downturn that could be the effect as regards the economic performance and unemployment, and those two should be married or combined to have an effective outlook or performance in the economy.
All right, I guess we'll all be looking out for how the central bankers work out 2026. Thank you so much, Halima Adediran, a senior analyst, financial derivatives company. Thank you.
Thank you for having me.
All right, to global news stories now. We have Will Ibong with the details.
Hey, Ladi, very interesting to know that Fed Chair Jerome Powell is going to be having his meeting today, starting today.
First one,
and
2026.
especially, the unprecedented criminal investigation into him, the probe Donald Trump, well, not Donald Trump, the Department of DOJ launched against him, but we all think it's Donald Trump, but he says he knows nothing about that, and this is going to be a turning point because it's probably his last meeting as Fed chair, and also what decision are they going to take?
Right. All eyes now on the next Fed chair after, I think that's coming May or so.
I will see how that plays out today. But we'll kick off as always with India, and European Union have closed what Prime Minister Narendra Modi describes as a landmark free trade agreement aimed at boosting trade and economic cooperation between both sides. Now the deal coming after 2 decades of talks links markets covering nearly 2 billion people and around a quarter of global GDP, coming at a time when global trade is under pressure from rising tariffs and geopolitical tensions. Now the EU is already India's largest trading partner, with goods trade topping 120 billion euros last year, and the agreement is expected to support key sectors such as textiles, chemicals, machinery and manufacturing. Up next, South Africa's ruling Democratic Party says it will fast-track a key U.S. investment bill by the end of February after President Donald Trump threatened to raise tariffs on South Korean exports. Now, Trump said tariffs could rise to 25% from 15%, citing delays in Parliament approving a trade deal tied to Seoul's planned $350 billion investment pledge to the United States. And despite the warning, South Korean markets pushed higher. The Kospi reversed earlier losses to jump 2.7% on Tuesday, hitting a fresh record high and a leading gains across Asia. Now, still in Asia, China's industrial profits rose 0.6% last year, ending 3 straight years of decline as Beijing moved to curb aggressive price wars and companies sought growth abroad. Now, the rebound was led by a 5.3% jump in December, the strongest since September, supported by pre-holiday stockpiling and renewed factory activity after months of contraction. Economists say government intervention and overseas expansion helped manufacturers offset weak domestic demand, which had left many firms struggling with excess capacity. Now, Chinese tech giant Tencent plans to expand its cloud business in the Middle East as demand for data centers and AI infrastructure in the region rises. Now, Tencent Cloud CEO Dao Sintong says the company is exploring new data centers and availability zones, building on its existing cloud presence in Saudi Arabia. And the move comes as tech spending in Middle East surges, setting up stronger competition with U.S. cloud giants like Amazon, Microsoft, and Google. Now, Micron Technologies is investing $24 billion to expand its wafer manufacturing plant in Singapore, adding 700,000 square feet of clean room space to boost non-chip production. Now, the new facility, expected to start operations in the second half of 2028, comes as global demand for memory chip surges, driven by artificial intelligence and data-heavy applications. Now, Micron joins competitors like Samsung and SK Hynix in ramping up output, while also building a $7 billion advanced packaging plant in Singapore to produce high-bandwidth memory for AI. Now, Meta is set to trial new subscription plans across Instagram, Facebook, and WhatsApp, offering paid users extra features and expanded AI tools. The plans will include access to Meta's recently acquired AI agents from Manus, as well as advanced capabilities in its short-form video app Vibes. Now, Meta says the subscription aims to boost productivity and creativity, and the company will gather user feedback as the rollout progresses. And still in Asia, we see Japan is set to sell 40-year government bonds on Wednesday, a move that could shake that already fragile debt market. Now, investors remain cautious after this long-term tenor has shown sharp price swings in the past. And last week, bond yields jumped to record highs after Prime Minister Sinai Takaichi proposed a 2-year food sales tax cut, pushing the 40-year rate up more than 25 basis points. And the auction comes amid a weak yen and rising market volatility, with analysts watching closely to see how the debt market responds. Up next, shares of Puma jumped as much as 20% on Tuesday after China's Anti-Sports announced it would buy a 29% stake in the German sportswear brand from Pinot family for 1.5 billion euros. And the move marks Puma's largest shareholder. Now the deal comes as Puma has struggled to boost sales under new CEO Arthur Erd. Now analysts say the 1.5 billion euro price is reasonable, given Puma's current challenges and offers Anta a chance to expand outside China. Anta plans to leverage Puma's global brand and heritage to enter new markets and product categories, complementing its previous acquisitions of Western sports and lifestyle brands. And we see European stocks are expected to open high on Tuesday, with the FTSE up 0.18%, German DAX already up 0.15%. Now CAC 40 in France up 0.3%, and Italy's FTSE MIB is up 0.4% as investors focus on earnings this week. Now reports from companies including ASML, Volvo, LVMH, Deutsche Bank, Atlas, Copco, Sadvik, and Logitech will drive the week's trading. Now global trade jitters remain after President Donald Trump threatened higher tariffs on South Korean exports, while S&P 500 futures stayed near flat ahead of the Federal Reserve's upcoming rate decision. And now with equities still in mind, let's check in on Wall Street performance on Monday with Maria Bird.
The U.S. stock market climbed on Monday, following behind a major spike in the value of gold in the United States, as many investors are watching to see what this can mean for the next few days and weeks ahead, as everyone is watching and waiting to see what will happen with the Federal Reserve's rate cut meeting this week. Additionally, there are some major earnings reports for some big companies that is set to release as well. So there's much hope that we could see a continual climb in the U.S. stock market, as the Dow Jones was up at 0.6%, the S&P 500 up at 0.5%, and the heavy tech NASDAQ took the day up at 0.4%. Many investors will continue to see how this week will pan out, and much hope that we will have a positive first quarter in 2026.
All right, thanks, Maria, and thanks, Will. Well, that's it for the show today. Thank you for watching. I'm Laddie Williams from the team right here at Channels HQ. It's bye for now.